Hello and welcome everyone. This is John Person reporting for the Bottom Line Commodity Report. It is, of course, Sunday, March 11th. Wow. Daylight savings time really took an hour away from us, but the year is just flying by. So far, we're just about less than 6 days. It's going to be from St. Patrick's Day. And then, of course, we're going to be coming into the end of the third quarter, which is the last trading day of March, which will be Friday the 30th. Now, as for the markets, let's go over a couple trades. One, the live cattle. We covered this in hindsight a little too early, but after the market had a peak up here at this 127.87, we had three trades there. Two were positive, one was negative. Net result, a gain. The market has succumbed to a decline. This is the June futures contract that you're looking at, an actual weekly chart of the June futures. On balance volume has declined, so it's showing that there is a good liquidation process occurring. But I'm not thoroughly convinced, even though we had this long-range bar here. Look where it stopped, in the middle of this long-range bar. So I think we're coming into a little support. We should see a bounce. I'm looking to establish and re-enter the short side of this somewhere at this 126, 126.40 area. I think we'll get a shot up there. I just don't want to have this market go down, shoot all the way back up, and then watch the uptrend. So I think that stops here, if we get short, we're going to be looking at this on a day-to-day basis rather than just putting in open orders right now, because I'd like to see if the market gets up here. I mean, I don't think we're going to see the market go from 123.87 straight up to 126, but in the course of this week, if we start to linger there, it takes 3-4 days, the market looks tired of the rally, then we'll look to get short. My idea is to sell up here at this 126.20.40 area, so keep that in mind. As far as the British pound trade, what we did is, as the market traded up near this moving average resistance, I took off half of the position, and I kept the stops up above break even, just in case the market did what it just did. It just failed. This is an extenuation to the downside. We've generated a weekly sell signal. The reason I wanted to give this a shot to the upside is because seasonally we are in a period of strength in the pound versus the euro currency. We typically see a market rally. If we could turn to a weekly chart, you'll notice that the market did fail, generated a weekly sell signal. But because we're entering a seasonally strong period of time, I don't want to get short this market, because if it rallies back up and leans against the moving average, it could go, and that could have been the buy, and this could be a false sell signal, which, like, for example, existed last June. The market generated a weekly sell signal. It reversed course and traded higher. So we're going to keep our eye on the pound as it is right now. But overall, if you only had one position on, it didn't cost you anything. It just, to me, felt that we had to give this market a chance. We were in a daily buy. The market had this long buy shadow in here. We got long the market. We adjusted our stop accordingly. And unfortunately, the market succumbed to selling. So therefore, we were stopped out. But you should have been stopped out before, or after commissions, with a small, tiny, buy yourself a cup of coffee profit. I apologize for that. And of course, the stock market, with the 1 day or 3 day sell-off, it was completely reversed. The rally that ensued in these 3 days was on significant volume, number one, and we're in a seasonally strong period of time. So is this correction over? We probably could see 1380, 1385. I don't know, by the end of the quarter, 1416 is the predicted monthly resistance. That would be a tough number, but I'm not going to argue. Unless I get more evidence of a sell-off in the marketplace, and even on a weekly chart, we don't have that. The on-balance volume is in a pretty clear breakout mode. As you can see here, we broke out above the highs in price from back last summer, and now we've broken out with substantial volume. So is it time to go long this market? And I have to say, some of the advanced decline work is suggesting that the rally is tired. So selling, I would say, if we get up to maybe 1385, the monthly R1, that might be something of promise. One of the concerns that I have is this other market, which I'll show you right now. Crude oil. Crude oil prices generated a daily buy signal And as you can tell, we closed here at 107.42. So if this is a correction where the market rallied, and let me show you here. So the market rallied, went sideways. The market rallied, and now it's pulled back, and it's tested the point of breakout resistance right here, as you notice. If that is the successful test of old resistance, which turns into new support, then, folks, I think we're in a little bit of trouble here, because already prices are close to, for mid-grade gasoline, $4 at the pump. And that is something that I don't care. Of all the reports, I did see some news saying that it's not going to affect the global economy unless prices get over 120. Listen, 6 months ago they said it was going to affect the market if we saw 105, 110. We've been at 110, and the price duration that we've been here, seriously, we've been at this 110 since the mid part of February. And so the longer it stays up here in a strong period of time for crude oil, the more concern I have for going forward. So as far as the monthly unemployment report, and as that was good news for the economy, I don't know if it's sustainable for the fact that we have energy prices up here. So that is the one catalyst that's an issue for me. The Middle East, Syria, Iran, Ken, this is all a big issue and a what if. So buying stock up here and getting long S&Ps, I think I got to step back and look for opportunities elsewhere in the marketplace. As they say, when in doubt, stay out. So that leaves us the bond market. I mean, how are you supposed to trade a bond market that is in a narrowing channel, except for play the channel? The unfortunate part is, by the time we've identified it is a sideways channel, it's going to break that channel. It could break down below it real briefly and then trade right back up into it. The fact that the stock market is up and bonds are not down, bonds are nowhere near as we are seeing the stock market making or attempting to make newer highs. Look at this. We were in October down here at this 133. It bases the June futures. We're nowhere near that right now. In fact, this long shadow that evolved out of Friday with higher energy prices, you would think it would be more inflationary. With an improved employment situation, you would think there might be some wage cost inflation pressures. Of course, the Fed says no, but you know something's going to have to give here. And so the problem that I have with the market is that crude oil's up. Global economies are perceived as weakening. Recession in Europe. China's coming down off of their GDP figures. However, it's an impressive growth rate nonetheless. But yet the bond market won't go down, and that's a little worrisome for me. So things are not jiving with this new intermarket relationship. One of the other factors that I want to look at, and we'll see that right now, is, of course, the U.S. dollar. And so the U.S. dollar gaining strength should be bearish for gold. And it shows that people are more interested in investing, or at least the lesser of the evils is in the U.S. dollar. So for that standpoint, can we anticipate any weakness in gold? And as the dollar moves up, it makes crude oil prices relatively more expensive. So here's the problem I have. Crude oil is at 107.5, almost 110 again, and yet here we have the dollar rallying. So there's a lot of things that are confusing in the marketplace right now, and I think it's best until we get these issues resolved or trend changes better identified. I'm going to be looking again at some other markets, just like we did with the cattle and, of course, the British pound. So that leaves me to conclude that sugar, which formed a low-close weekly, low-close doji formation, unfortunately we're at or near support, but the decline was on some significant volume. As you can see, the on-balance volume breaking below prior lows, and we are in a seasonal period of weakness coming in. So the market has time going into May for continued weakness. So what do we do with the sugar market? We look for a sell signal. We've already seen a decline in the marketplace. I'd say that any challenges or tests back up here to 24.5 might be a worthy trade. Risk factor would have to be up around 25.34. So we want to be a little bit cautious with this one, because every point in sugar is $11.20. So if you have over 100 points, it's $1,100, almost close to $1,200 of risk for just 1 cent in the sugar market. It's a fairly low volatile market right now. We're not seeing 300-400 point swings every single day. It seems to have trended fairly decently, respecting, as you can see here, when it rallies, in bear market condition, it respects the down trend line, and when it rallies, when it breaks, it respects the overhead moving average resistance. When it rallies, it respects the moving average as a support. So as you can see here, we are now breaking to the downside. So we probably, the moving average intersections around 24.30 with the monthly pivot. Let's turn the monthly pivots off and go with the daily. And so we have 24.06 going into Monday. I would want to see some type of resolution, at least a test, I think, of this old. If you take a look here with me, I'll show it to you. That old high turned into resistance, turned into support right here. I think one more challenge is also 24.40 area. So let's see how the market looks up around 24.40. That seems to be a big swing point of interest, 24.40. Look at it way back over here in November of 2011. So for going into this week, short side of sugar might be in order. If the dollar continues to strengthen, perhaps some of these commodities are going to deflate some of these prices, like we've seen with the cattle market. And maybe we'll take advantage of the downturn in the seasonal trend of sugar. That's all I have for today, so I hope you found the information helpful, at least an explanation of why there's confusion still reigning in the stock market compared to looking at bonds, as well as looking at some of these other commodity markets. Thank you all. Hope you had a great weekend. We'll see you in the trading room this week. Thank you.